For now, we'll start the last panel, which is how to crack product market fit in robotics, insights from founders and investors. So the panelists, we have Gokul, who is the founder of Cynlr. We have Saurabh Chandra, who is the CEO of Ati Motors. We have V. Lakshmikant, who is the managing partner at Pavestone Capital. And Shyam Menon, who is the co-founder of Bharat Innovation Fund. This session is moderated by Ajay Sethi, who is ex-Accel and from the Open Science stack. So, sir, up to you.
Thank you. All right. Welcome, everyone. It's actually wonderful to have four panelists, 2 founders and 2 investors. And the idea is to talk about product market fit specifically for robotics companies. So I think hopefully you'll get to hear stories which are very, very relevant to you people. So first, let me start by giving a little bit of background myself, and then I'll request the panelists also to talk a little bit about themselves, and then we'll get into the content, right? So I am 20 years in the startup ecosystem, first 10 years or so, 2005 to 2013 as an entrepreneur, did 2 startups. One did well, one didn't do well. One sold for 200 million, so that was good. 2013 joined Accel. I was a venture partner there. I worked with Accel, had funded around 250 companies so far. And I worked with around 150 companies over the decade that I spent with them. Last 2 years, I've been spending a lot of time thinking about what we call Open Science Stack, which is actually a robotics-based, what we call science computer, right? Which is basically a robotics-based system which can run any science experiment that you can imagine. So I think there's some resonance with the universal factories that Gokul will talk about. But it's been my pleasure and fortune that I've got to work with Art Park at ISC, which is a deep tech incubator, as well as the deep tech initiatives at IIT Bombay. So I've been exposed to deep tech startups for the last couple of years. But that's my background. I'll request, maybe the order here is 2 founders and 2 investors. I wanted to mix them up, but we'll go in the order. Maybe the 2 founders can talk about your company, whether you have product market fit or not, and maybe how many customers you have today, right? And maybe the 2 investors can talk about the robotics-based startups that you have funded, as well as the stage of the company that you typically like to look at and invest in. Right? Very short introduction, but then we'll get into the actual discussion. Please.
Introduction about?
Yeah. Yes, please.
Hello, everyone. So my name is Gokul, and I founded Cynlr along with my partner Nikhil in 2019. Prior to that, had close to a decade long of experience in working in the robotics space and automation space, specifically focused towards vision and intelligence, and started my career at National Instruments. That was also my alma mater to a certain extent, and picked most of our understandings from there, and then interfaced with the industry for quite some 8 to 9 years, and picked some of these problems from there, and then we started as a startup in 2019 to build some of the missing pieces of intelligence and perception that are needed for your successful implementation of robotics and robot automation in industry. So that's where we are. Yeah.
Number of customers and
customers
PMF or not?
So, we just reached to the market. We have been building our product from 2019 till last year. So last year, June is when we released our first version of the product.
Okay.
So we have GM and Denso as our paying customers, and we have a few other customers which we have onboarded recently. And we are close to a 50-member team now, and growing possibly to 60 plus in the next quarter. So.
Okay, he's not answering PMF question. We'll come back to that. But go ahead.
PMF, difficult question.
Yeah, that's a whole discussion as well.
Yeah. So my name is Saurabh. I started Ati in 2017. Before that, I had no experience in robotics, right? So, but now been doing this for 7 years, so I can say we have learned something. We have real robots which are running across more than 30 customers: US, Mexico, India, Thailand, Vietnam, soon Singapore, right? So we have PMF at least, and I think PMF is a moving target. You can get out of PMF also, but I think the first product we have out there, definitely we have PMF. We have really cracked the product and the market and made sure that we could get to the global markets for sure. This is my second venture. Before this, I used to run a software company. Before that, I was a product manager. So I come at this from a very product management lens.
Got it. Cool. Lakshmikant,
Thanks,
please.
Ajay. I guess people can hear, right? Loud. Okay, thanks. So my job is made very easy, right? Because which company I've invested in? We have invested in Cynlr. So, I mean, he's kind of... And I'm here just to keep an eye on Gokul now that the funding is over. Okay? I don't want him flying to Switzerland or something like that, so just making sure he's here. So my name is Lakshmikant. I'm managing partner for a fund called Pavestone Capital. We are a $100 million fund, all domestic. Primarily invest in growth stage firms. 20% of the capital for what we call as moonshot / cutting edge technology. So that's from a fund perspective. We'll talk a little more about it.
Sure.
Personally, this is my 42nd year in the industry. So I've been more a developer at heart. Worked with a company called Intergraph, a large CAD/CAM major. That's when I had little exposure to the CAD side and how that integrates to manufacturing from a robotics perspective. So that was my initial exposure. After that, I moved to financial services because that's where the money is, right? Okay, and then finally, over the last 10 years or so, part of a fund called Parampara Early Opportunities Fund. A lot of interesting startups there, and then now with Pavestone. So 10 years working with the likes of people like Gokul. So.
Any other robotic startups or in broader deep tech startups?
In the sense, I wouldn't call it robotic startups. We have a company called Robotics, which is in space.
Yeah.
Okay. We have a company called New Space Research, which is probably one of the largest defense-funded companies in India, and we are the first VC to fund a defense company.
Sure.
They are in the swarming drone technology space. So
Okay.
fairly technology intensive. And some in the earlier funds, like Atomberg as an example. So.
I see. Got it. Shyam.
Hi, so I'm Shyam Menon. Can you hear me?
Yeah.
Okay.
Yeah.
So I'm the co-founder of Bharat Innovation Fund. It's a deep tech fund that was launched back in 2018 with a couple of my partners. Prior to that, I had done Infuse Ventures, which is the first climate tech focused seed fund in India back in 2012. Prior to which, I ran a small deep tech fund in Europe, backed by a lot of the corporates, looking at deep tech in the energy value chain, looking at energy storage, fuel cells, etc. And that has been my basic area of work. I'm a nanomaterials researcher by training, not a MBA or a finance person. Came into this as an entrepreneur, did 2 fuel cell startups in the US from '99, exited one of them, and then entered the VC industry from 2007. So that's been the journey. It's been a journey from material science to fuel cells to deep tech venture capital. Bharat Innovation Fund, in Bharat, we haven't yet done a deep tech, in a robotic startup yet, but we've got a lot of companies that are very heavy deep tech in the healthcare side. On, for example, cancer drug, immuno-oncology companies. We have companies that are doing molecular computing, next generation diagnostics, a whole bunch of companies there. But we also have, as a partner, the incubation arm at IIM Ahmedabad, called CIE, where we have done a bunch of robotics, very, very early stage, seed investments many, many years ago. It's also the same incubator where IdeaForge was first backed, and then we had Grid Bots and a whole bunch of startups that were backed out of the incubator. Not yet in the fund, but now going into our fund 2, robotics is going to be a big part of our thesis. And over the last few years, we've been spending a lot of time with the startups in the ecosystem to understand better, to develop our thesis and have a view on how to be able to play the space now.
Shyam, you've done one Detect Technologies with Accel.
Yes, Detect is there, of course. But now it's become more of a SaaS play, which is in the computer vision space for the energy industry right now, energy and process industry. They had an element in there of robotics, but it's now pretty much become an edge AI play, which is doing for occupational safety and productivity improvements for process industry and for the energy industry. But at the incubator, we've done a bunch of work, but not in BIF yet. But going into Fund 2, we expect to do more.
All right. So that's the introduction. What we'll do is we'll have 4 sections, 4 parts in this conversation. The 4 parts are roughly based on what a typical startup goes through. So the first stage of any startup, or when you're thinking about an idea and you're thinking about a startup, first step is to find out a problem, a use case, which is a very specific use case, and then modulate that by the size of the market, because the opportunity should be large enough for it to be an interesting opportunity, right? So that's number 1, pick a use case with a large enough market size. Number 2, you have to build the first product, the initial product. Typically in deep tech startups, we have found that such initial product should be built in collaboration with a customer, what we call co-creators. These co-creators are people, customers who are willing to pay for your product, but also collaborate with you, interactively work with you, right? Give a lot of feedback so that you can build the right product, number 2. Number 3 is once you have done that, is to actually build a real product. And at that stage, the focus is on delivering value, not on making too much revenue. I think you should always make revenue, but that's not the primary focus of stage 3. Stage 4 is when really start thinking about making money and figuring out if the unit economics is working out, right? So those are 4 stages. And what I love to do is the panelists to talk about this. I think they might or might not agree with all the 4 stages, which is perfectly fine. We'll want to hear different perspectives. So starting maybe in this order, or, Gokul, maybe your story, I know that you talked about Cynlr started with a vision and perception as a problem, which is a very horizontal problem, right? Yeah. And I said a single use case. So does it contradict?
Yeah, okay. It's kind of in a certain way, but it doesn't and it does.
Okay.
Let me put it both ways. But one thing is to, sometimes when we observe business, we observe with a kind of a template, right? So there's a commoditized approach that goes towards it. But when we are looking at a deep tech, it's not yet a commoditized space, right? Because you're starting with, so I would split it into 3 ways for my sanity's sake. So usually it's application level markets, and there are platform level markets, and there are technology level markets, right?
Okay.
A GPS versus somebody who's using the GPS, and then building a business model around that, right? There is business model innovations on this front.
Right.
I think robotics as a space, possibly somewhat in the AMR space, it has matured to a certain extent where you have platforms available. Now we can start thinking towards productization, but when it comes to most of the other parts, when we include industrial robots, industrial automation, and those segments, there's a huge gap in the technology space in itself when you're actually building. So, on the other hand, another perspective to think from. Often, most of us are gullible to this thought process of thinking from a solution and then assuming that it's going to automatically start scaling into a product.
Okay.
That's an engineering fallacy, and a lot of us have suffered it. The background where I come from, we used to see that repeatedly happening with a lot of startups which were based on national insurance platform doing this mistake and again and again. Often, that's another reason why so when you ask the product market fit, right? So we started with the fit, right? So to go into, but what it happens to be is that it's an ecosystem problem than just a one component problem, right? That's kind of missed many times. So you have to, if you want to productize something, you need to productize the problem first, right? We can't take from one use case and then I'm going to solve focused on this one use case, which is basically you're applying your skill sets. Most of the times what the first excitement for you to start is, oh, I'm really good at the skill that I have. I'm good at my robotics understanding, my toolkit understanding or fundamentals understanding, and then what we do is to jump in to start monetizing that skill. And then to get a direction, we might pick a particular problem. Right. We might start from that particular problem, and often at the end of it, many do discover that it doesn't scale, right? On the other hand, if you want to hit the scale, I have to begin with an underlying segment of a common denominator of a problem. And then you bring a representative that encompasses all of these problems and then take the sample use case. Right. There comes the next aspect that you actually also touched as a co-creator.
No, we'll come to co-creator.
Oh, sure, yeah.
So what we'll do is, first we'll go through the first question. Sure, yeah. Everyone comments on that. And I think what you guys can do is, these are just questions to warm you up. So start thinking about the questions you want to ask. We'll try to finish our conversation in 40 minutes. So 20 minutes for you to ask questions, and we'll try to answer them. So that's the whole. So So maybe going to you, Saurabh. I know that you started specifically by focusing, actually, your bigger vision is to become, autonomous robots in factories, but you worked only on tugging robots, and that too only in automotive industry. Yes, so it seems to be contradicting or, not the same path at Gokul. So maybe your comments and your story about.
Sure. Yeah. So, but by the way, the tugging, etc., happened later though. Right?
Okay,
so
maybe you can start.
Initially, we took the bet was much more broader that autonomous vehicles are going to be big, right? So we said, okay, we'll first build the autonomous technology. So we did invest in making the technology layer first, right? The underneath, and we wanted to build the full stack. I don't agree that the place was already mature, or if it was already mature, then I wouldn't want to do it, right? Frankly, I mean, it's not interesting for me as an entrepreneur to go into a mature space. Okay. I wanted to go in because it was nascent, and there was opportunity to innovate at all levels. And in fact, a lot of people were trying to only innovate on the business layer while the lower layer was not great, right? But it took a much bigger bet because we decided to do with full stack. right? We are doing our own vehicle, we are doing our own electronics, our own software stack, and then an innovative business model on top, right? So you're trying to solve a lot, but then you constrain it. You do a lot of things, you do the full stack, but in a narrow domain.
Right.
The narrow domain we chose little later.
Right.
So initially we said, okay, we'll build the autonomous technologies. Then I went around with, and I always believe, right, I think customers are they have no imagination, typically, right? So you have to show them something, then they can comment on it.
Correct.
Okay,
Right.
so if you just ask them what you want, they will always say, right? Like, I mean, famous analogies, people would have said, I need faster horses, etc.
Yeah,
right?
yeah,
Nobody will
that's
say, I want a car.
Ford is ascribed to us,
So there are a lot of such examples, right? So,
Right.
so you have to show them something, then they are very good at, because they do understand their business so much better than I would or anyone else do, right? So once they look at something and say, yeah, I can use it like this, I can use it like that. So we had an early prototype, we showed it to a lot of people, and we found that this automotive industry seems to need a lot of them. It was not a tugger, we morphed it into a tugger at that time. So you have to be agile, right? I mean, it's not like what you started out with is what you will build. So you have to use good design principles, it should be modular, you have to be able to adapt to what you see in the market.
Understood.
And then we got PMF, right? So we didn't start with a fit, frankly, and we started with a broader thing. But the area was clear. I was very confident that we are in the right space. And I had confidence that we can go through the fog and come to some PMF, which we did.
Got it. So the question for Lakshmikant and Shyam will be slightly different because clearly the use case selection is done by the founders. So the question for the investors is more about, if you look at a startup, do you think they should look at Indian market to get started, or should they look at the global market from day one? And if Indian market, then how should Indian markets be looked at, right? In what form and shape should Indian customers be considered? So,
I mean, it's a great question in the sense that usually the VC math is used, you try and work it out in India, and then you scale it to a market which pays more. That's its usual mantra that we go. I mean, it's not as simple as that. In the sense, if it is as simple as that, every VC had a playbook, and everybody follow the playbook, and everybody a topper in the class. So it really doesn't work that way. Okay. So in my opinion, this product market fit is a mythical beast. Okay. And we like to talk a lot about it, and we've seen hundreds of companies. Okay.
Sure.
And I agree with my fellow panelists here. It has to evolve. Okay, that's a fundamental thing. Okay, you don't ever get it right the first time.
Right.
What is product market fit? Ultimately, at some point in time, something will click and people will start buying.
right.
Okay, or you'll get one or two anchor customers. That's when you hit the product market fit. Okay, so rather than get hung up over it. Okay,
I know. Though the question is, in the PMF, M is market, and if Indian market is not large enough, should a startup look at Indian market? Or should one look at the global markets from day one or day zero?
The answer is, it depends. It depends on what problem you're trying to solve and what product you're trying to sell. Okay, because the M part, right, the marketing part in that market is very different from
This
the
market,
form
correct.
factor is very different. What the customer wants, you don't even know that business. At least here you may know the business a little.
Right.
So personally, if you ask me, it's better to test before you get. That would be my And I think the other point made very well is about the fact that customers in many ways don't know unless you put it on. And it's like this, right? So if I ask you, do you want to eat healthy? You'll say yes. Do you want to exercise? You'll say yes. Okay. And then in case, based on your feedback, you open a gym, you won't come there. If you open a fast food joint, you will come there. Okay. So moral of the story is don't listen to the customer at times. Okay.
Yeah.
So depending on the use case and the problem, you will have to. See, I'll tell you, one of the most important things you talk on the M is the fact that it's not just about your product. Okay.
Right.
It's also a lot to do about the branding. It's not just your brand, your product brand. It's the ecosystem brand. Okay.
And
What do I
India
mean by
brand
that?
also?
No, I'll tell you what I mean by that.
Yeah.
Okay. So, for example, I'll just give you my story. When we used to sell software services in late 80s, we would start with showing a world map and where India is. Okay. We would show this is where India is. We are the fourth largest. Okay. Today you don't have to do that. Okay. So, Made in India is a brand now in certain areas. Okay, Made in India for IT is a brand.
Right.
Made in India to some extent for space is a brand. Made in India maybe for robotics is not still a brand. Okay, so some of you are going to be pioneers. You're going to get shot.
Yeah.
Okay,
Yeah.
but you're going to pave the way for somebody who comes in 10, 15 years later.
Martyr bana diya.
No, what I mean by that is, don't underestimate that. Sometimes what happens, we have fantastic ideas. There's so much of passion, guy will come, why not you? It's not about you, yeah? Okay? It's like that. Moment we say it's a German product, we assume that it's a mechanical excellence, right? That brand needs to be also established. And people like Gokul and all are starting to do that. Right? So don't get hung up on the product market fit. Evolve. Okay? Today it's going to be more and more multidisciplinary. My only advice is, as a founder, please be humble. Don't think you know everything. Okay? And I think Gokul said it very well. You start to look at through one lens, you need to look at through multiple lenses. You should be open about getting other people on the product and have some passion on some area. Okay? It'll automatically evolve. And I like to use the term committed innovator. Committed means long term. I can go on for this, but I'll just stop at this moment.
It's actually
Yes,
just
Shyam.
a bunch of points here make sense, but I'll just tell you some learnings from our experience. Initial customers may not determine the initial markets where your product will work.
Right.
Yep.
So we've seen this time and again. You may get some initial customers, but may not necessarily mean that's the industry that you should serve. It's a starting point, use it. But your eventual market where your actual PMF may come may not be that. But hence, ensure that the flexible architecture is there so that you can make things modular and pivot to the market that will become your PMF market over time. Don't be so rigid that it's such a narrow play because of your initial market that you saw industry and create something just for that. Because finally, when the actual pivot has to happen, you can't be going back to basics.
Right,
so you will need to ensure that flexibility right from the beginning. Now this PMF concept, in terms of this India-US thing, what you're asking, if you look at our portfolio, pretty much across the portfolio, they use the Indian enterprise customer as the iterative place to make the product better. But we've seen Indian corporate customers have not been the large-scale adopter of anything deep tech. I'm not even talking specifically robotics, across the board. Even industrial AI, whether it is health tech, it doesn't matter. They've not adopted. Multiple reasons. I mean, DNA is not there. That risk-taking ability to say, I'll be an early mover to adopt something which no one else has adopted in the world, that is not there. We've not seen that for most enterprises in India. I'm hoping it changes.
Got it.
But that is something we've seen. But iterate here, start selling elsewhere, and it's a boomerang effect. Eventually, the same product gets accepted back here, and then you figure out how to get it to the right price point for India, and then you bring it back. So this is it goes around and comes back. So that's at least our learning from our experience. It's a very generalized learning, but it's a learning.
And I think people can ask specific questions if you have. So please, again, we'll try to, again, accelerate a little bit so that we can finish on time. But second set of questions, co-creators. And I think, Gokul, for you specifically, I noticed Ford and GM were some of your early customers. I don't know, were they co-creators or not, or what National Instruments your co-creator? And does the co-creator make sense?
That's a history that's different, but
okay.
So I think there are a lot of points in the way it has to be thought. It's not a very straightforward aspect when it comes, at least in the space where we are at, right? So for the level of maturity that it is, the one who tries to define, so when you're just a technology company, right? So somebody who's building a foundational tech that's missing, you're foundationally building things that are missing in your whole machine learning stack in itself and so on and so forth, and plus have to invent most of the components and things. You need the customer who defines that and gives you the focus of where that application is going to be, right? So, and they need to be patient customers. The first definition that you have to look for is when you're taking your accounts, in fact, a point even earlier than that, when you're looking at the enterprise point, right? The PMF, when you're actually looking at the PMF point of view, you need to remember that most of the principles when you go online, you're looking and then learning and so on, so whatever that you're trying to do, it's consumer focused, right? When you're selling to enterprises, you're selling to systems. You're not selling to individuals, right? The whole equation changes entirely different, right? And your product has to solution product. There's one other difference. What you're selling is what you intend to sell is a product you want to scale. What the customer, on the other hand, wants is a solution.
Right.
If you do not package a solution along with it, again, it's a problem, right? That's where it becomes an ecosystem play again. So the customer who brings that ecosystem, customer who has the patience and then understands that it's going to take the time, and he is going to evolve along with it.
Right.
In a sense, what I call as an angel customer. And that angel customer is not going to stay all along with you, right? They are going to give you the seed.
Right.
They're going to define the common denominator of a larger problem for you, and then kind of package it and then take it upwards, right? So that's how they also played, and that's something that I'm taking as a playbook effect that we do whenever. So National Instruments used to have a very large portfolio of products at the time, and when you're bringing a new division altogether, this is how the approach used to be, right? And then that definition further gets amplified because someone else looks at that outcome as an example, as an application case, and starts innovating their businesses in the background, right? So and most of them are waiting for someone to bite the bullet, fail, and they can learn. So it's very systemic, right? It's a systemic thinking because there is reward repercussion. There is, very tightly tied to everyone who takes a call on these decisions and things. So all these come to play, right? And often when the problem is how are you defining a product? Because customers are always going to tell you a solution. They are going to ask for a particular solution, and it's very, very narrow for them, which is not scalable to another customer, right? So when you are fixated with that, often you have to collect a variety of bunch of problems, and then from variety of different customers, one customer is never enough, or even and in our cases, when you say customers, within an account, you will have multiple different customers. Just one customer gives us more than $1 million of revenue every year now, right? So that's just the initial depth. We start doing more and more, and then it expands to a larger scale based on whatever the problem's expanse is, essentially, right? Now, when you are looking at the depth of that customer's value that he actually gives in terms of his problem, the factor to also notice between the customers, right? So the primary aspect is that the customer is going to give you only a underlining problem statement which he's actually trying out of his budget that he has allocated for some experiments, because of the system that they have actually set up with. Now what you have to do is to kind of working with multiple different customers, understand what's a common denominator, and then see who are all the other ecosystem players who can do the customization portion after what you're actually giving. So often you have to start bringing partners along with you, right? Which we call as system integrators in certain cases, and also you have to work backwards to say how your supply chain is going to work for you, right? That's another problem that you have to actually scale between. And the last point is, when we think about product market fit, again, the definition, often price market fit is an independent statement that you have to kind of focus and then discover, right? Correct. That's also is missing. Something is defined to be a product or shapes into a product based on whether the price is fitting or not to the market, right? So possibly in the form factor of what you have defined can have a scale potential. There are similar problems that are occurring in a lot of places, but just because price point falls, maybe you are not able to scale, right? So that could be an India market versus an abroad market differentiation that could come, right? So, so.
Got it.
Yeah. I am not a fan of co-creation. I agree with Gokul. One should go to multiple customers, and I think the startup needs to have their own point of view. So very often I see the mistake which many founders do is they kind of outsource the product management to the customer, but you can't do that, right? And especially when you're doing B2B, enterprises are very unique and very different from each other. So often the application layer is very different. You have to plan for your product to get customized, as he mentioned. Sometimes SIs are required, but very often the startup has to be your own SI, because initially all the large SIs will say, who are you? Right? I'm not going to do this stuff for you, right? So you have to be your own SI, but you have to think like that. But now that's where there is no science to it, right? How much is customization? What is the product? If you become too much product, then you are a projects company. You are not really a product company.
Absolutely.
Right? And so this is this definition of where does my product stop? And setting the boundary is not easy, I would say. And there you need little more product roadmap to figure this out. And this is a very enterprise problem though, right? I think consumer is very different. I wouldn't comment on it. Consumer guys, please don't take my advice. But enterprise, I understand pretty well. And I think in enterprise, one has to be very careful of this dynamic.
Got it.
In fact, just to chime on this, it's bang on to say that the definition of where the solution is, where the product is is never clear.
Yeah.
And when you're thinking product, don't think that it's the material that you're building. It's a process that you're taking them to.
Yeah.
The infrastructure and the people are also part of the product in itself. Right? Even as simple as a manual could productize it. IKEA. Right? Even in the consumer thought process, right?
Yeah.
It may not be a complete finished one, but you could put that together where a customer can consistently get your solution.
Correct.
Right? As long as customer is with the least effort, with the least additional cost, within his planned time, is able to get a solution, and you could structure that whole process, you are there to somewhere closer to, right? So, but that definition is very, very hard, and it's an evolving process altogether. So, yeah, just want to add that bit.
Yeah, I think some very great points, and I too come from the enterprise, so my knowledge of consumer is very little. I think this, again, co-creation, we need to probably define what is co-creation. Okay, it's a very, my take on that is, end of the day, you will have some anchor clients. Your initial clients will be anchor clients.
Of course.
And that's what I think is the co-creation.
Okay.
So typically, the point is very well taken that you need to be very careful as to where the anchor clients drag you. Okay, if they drag you too much into full customization, one-time implemented product, you will not scale. But the problem for a lot of startups is you'll go and you'll sign up one G, right? And you'll be so thrilled and you'll want to do everything that G wants. Okay, it's very difficult to say no.
Right.
And the question is, when do you say no, or how do you make your architecture and your processes, you could say a little more modular so that you can handle some of these things. And that requires a lot of thought and the guts of the founder to be able to say no at certain point. And you'll be surprised. If you say no, you'll be more respected at times. Okay. So that's my 2 cents on that.
Actually, all of these points are extremely valid. I just want to add one more is ensure IP dilution doesn't happen when you engage too much with these customers.
Right.
Because it starts to creep and flow out. Because their people are with you in that system looking at what you're doing constantly. So we've seen this happen. And it is shocking eventually to the startup when they realize that knowledge has seeped out and they can do more or less what you were planning to offer. So have very clear boundaries, ensure the IP dilution doesn't happen. Ensure you know where your work stops and you bring in other partners so that you don't just do customization forever. You are trying to build a product that can go beyond that customer. So ensure that it's really defined what you actually do and you know who to bring in at the right time, and ensure IP dilution doesn't happen. I mean, this is something we have seen time and again in our portfolio.
Can I just add one more point? It's a very, very, very important point, and I want to add one more to this. Enterprises typically have a herd mentality. What it means is, one large enterprise buys it, then some 10, 15 others will buy it. I mean, the reason is very simple. McKinsey would have come, made a report, they based on it, some enterprise would act on it, McKinsey will take the same report, go to 15 other enterprises, okay, and they'll start buying, okay. So you'll see that herd mentality. The counter to the herd mentality is all of these are kind of clubs. If you set a price point at a certain enterprise, it'll float around the market. Okay, I can give you examples of companies, especially India financial services. They got anchor client, 100K. They were so thrilled. No other bank wanted to pay them more than 100K after that. So you'll get stuck in that. So be careful on the pricing bit also.
Right. All right. Great. So third step of the process is once you have established your early product, you're delivering some value to anchor customers, not co-creators. Then I think comes, okay, now you need to acquire more customers, right? And my question to all the panelists are these customers different in your experience from your anchor customers, co-creators who are willing to give you feedback? And maybe talk about first or second customers, first few customers that you acquired. I mean, and I think for you guys, slightly different question, but we'll come to that. So, or we can switch the order if you want, maybe, because you have to, no, I think the question is different, so you will be able to give your comment. Yeah, please, go ahead, yeah.
Absolutely. You are right. They might be just a subset sometimes, or could be entirely different, right? Okay. So in fact, I want to take an example, like just a couple of months back, exactly, I'm forgetting the date, but we had an interface with one of the person who foresaw the whole deal between the Kiva Systems and Amazon, and who was the technical head at the time, and also eventually grew to lead the Amazon Robotics also, and then now he's not there. when he looked at us, the first statement that he said is, you are at the exact same stages where we were, right? So,
Nice.
and he was just saying till that acquisition actually happened and they could vertically integrate the whole product and get the supply chain entirely and then build that whole platform altogether. They have been like hunting between one customer to another customer, discovering where this could be applied for and so on. So most of them do go through this issue, right?
Right.
But it created another market that we never even foresaw, right? And then warehouse becoming a huge genre of an independent industry in itself for automation, right? Is something that was not witnessed without and the way he described this also is that Amazon had no clue what they're doing. Right. They had no technology understanding. They just bought on to. I was saying I would like to see the guy on the Amazon side who actually kind of could see through this without any idea of whether tech will work, whether they will be able to build this engineering thing outcome out of it or not, but created a new genre.
Yeah.
Many tech, if you would notice, did take that sort of like a serendipity to create an independent, if you're thinking from a tech layer point of view, right? Yeah. From an application point of view, it could be a market consolidation in a certain way, right? So again, based on which layer are you, at what level of value addition in the chain that you are and looking at, this would actually change, and eventually where you would be scaling most probably would be different, but you should have a foresight for it.
Got it.
If you do not have a foresight, it could be entirely different later, right? But that doesn't matter. But when you're putting your, the fundamental framework, like what Saurabh was saying, right? So they foundationally started with working on the framework,
right,
from the scratch in itself. So if you don't have that framework laid with a bigger picture that is there, which need not stay only within the opening market. Like we chose automotive because that's the only customer who has or an industry which has an inbuilt ecosystem which could adopt a very nascent tech, right? They have an internal automation team, they have an internal understanding to integrate, they have a whole ecosystem of system integrators where none of those you have to work with, right? But they may not be the scaling customers. But when you learn and you discover your company through your customer, right? And then you formulate that whole structure. And often the difference between a solution and a company is that a product is that a product needs a whole company behind it, right? So different roles, different things. What will your operations do? How will you approach to the market? What's the definition of value that you will say in terms of marketing that you will actually put them and all of that, right? So the supply chain that you figure out and everything.
Sure.
So you'll discover that through the first customer, but keep it open and then keep it explorative to a point that you would actually find your scaling customer in an entirely different genre and industry sometimes maybe within the same customer, but the definition will fall in place.
Okay, fair enough.
For us, we did find where we have scaled were in the initial customer list, but there were multiple, right? So the first 3-4 customers all were a bit different. So then it is very difficult, right? Which one do you, like if you have one of each, which is the one do you go after?
Correct.
At that time, you just be opportunistic and see where is the fifth one, when the fifth one comes, are the two similar or not, okay? And you slowly try to basically let go of some. We actually let go of a very large customer, not name, but we did that.
Switch? So I know you have 100+ deployments and you have customers across 5 different or 7 different countries. When did you go out of India? Was it, what stage? Did you have Indian customers first and then go out?
Yeah.
Okay,
When we were very confident, so we definitely used India as a quicker iteration market. I mean, you're closer to your customers, right? So you can iterate much faster. And robotics has another problem which software doesn't have. Your product needs to get hardened. Right? You're talking with physical atoms, etc., and the robot will basically break down. Right? It won't be as reliable. And you're trying to go into large enterprises which demand very high reliability. So that bridge is also very difficult to pass. Right? Do you go to very high reliability before PMF? You can't do that. Right? So you may have solved the wrong problem, which is the worst thing a startup can do. Right? Exactly. So now, how much do you do and how much do you harden? So again, there is no very good answer, but there I think Indian companies are lucky. The cost of doing this is so much lesser in India than abroad. So we have a great advantage over startups in US or Europe whose cost of doing, if they do a mistake, they can't recover from it, they're gone. In India, we can.
Got it. So a question for Lakshmikant. With the increasing amount of money, government money, grant money getting available with IDEX in space and a bunch of other programs. A lot of startups or technology teams have government or quasi-government agencies as their initial customers. Is that a good thing in your mind when you look at a company, or does that raise a red flag for you, saying, you know?
It's a politically loaded question.
No politics, pure business here.
The answer is ideally in the sense that they're both, like I said, there are certain sectors we like where obviously the government is the only player by and large, and we could back that. Okay. Now, as of in the last maybe 4, 5, 6 years, defense is an area where we are seeing a lot more traction. The government has got a lot more programs, and even startups which actually supply get money. See, end of the day, the government is not about the grant. A lot of these startups confuse grant with revenue. Grant is not revenue, okay? So when they show us the business plan, they will show the grant and its revenue, okay? That's not it. The problem with government is not about the initial support that you get. Everybody is very gung-ho. But once you get stuff into production, how do you collect money?
Right.
Okay. And that still in the traditional sectors is not there. In few sectors is there. So we are very watchful of which sector. And depending on the sector, we would be open about most VCs would avoid, because the payment cycle becomes an issue. So there are other kind of startups. For example, in our case, Bellatrix, which we have supported. So their problem is different. The problem is they have to get space ready. In order to get space ready, you go through various stages of testing, just like any other TRL. In that, let's say, there's a launch schedule this May. You miss that launch, it's next year.
Right.
Okay. So you miss the bus for a year. Okay.
Right.
So that problem becomes very different from a funding perspective.
Right.
And if you take new space as an example, they've got all the technology, POC is done, order is placed, now they need working capital. Okay. And working capital, not too many people fund. So at various stages in your life cycle, the problems become different.
Right.
But to answer your question, would government in India, I would be on the fence on that one.
Okay. Shyam, equally tough question. Same question, but...
We haven't done a single deal where government is a customer.
All right.
Not one.
No.
And our focus has been honestly US enterprise market. So it's been the way we've looked at the market.
Let's say, hypothetically, a company like Solinas comes,
Yeah.
which does water and sanitation, right?
Yeah.
Would that be interesting? Because most of the customers will be municipalities.
See, that's the thing. If it has an industrial customer base,
right,
where their solutions can actually generate bulk of their revenue, I think that's what our focus would be.
Okay. So if they have government, quasi-government as their initial customers, but a potential commercial business out there?
Yeah, if there is a real commercial business there, but government's giving us support in the beginning, just that we are okay with. But at least as a fund principle, we have stayed with pure commercial business and typically good big enterprise customers, which unfortunately still tends to be US. Yeah. So it tends to be the nature of the market that we are dealing with.
One thing I must say, just to add to that, and he made a point earlier, one of the good things you can do by supplying to people like the military and all that, your product is hardened. It works in different conditions, okay? Right. Then it's easier to downscale than upscale. So that's one big plus in that model.
Right, got it. Okay, so last set of questions, and I think we'll reverse the order this time so that you get a chance to. So the last set of questions is, after you have established your early customers, now you're ready to figure out, does the business make sense, right? Is the business, can you actually make profits, right? And that's where the unit economics comes into play. So the question for you guys, to the investors here is, do you look at revenue as a proxy to PMF, or do you have certain other criteria that also look at, or maybe only look at, as a proxy or as a proof point for product market fit?
I mean, see, revenue is always easy as a PMF, as a factor, but actually speaking, beyond that, there are many other, indicators, right, of a PMF.
Right.
So it's just, a simple thing, right? If the customers actually start referring you to others even without you asking, that's an indicator that something that you're doing is working. They are actually referring you internally. Adjacent use case people within the industry itself see what you're doing and come to you.
Right.
Or for example, your churn, actually initially, naturally when you're putting something out there which is not fully baked, initial churn is very high.
Right.
But here, if the churn rates are dropping significantly, that's an indicator. Your customer acquisition cost, if it starts to drop, CAC drops, that's an indicator that what you're doing is working.
Got it.
Of course, revenue, monthly revenue, if it's increasing and if your contract value is increasing, those are very clear indicators. But all of these other indicators are also an amazing indication of the fact that your PMF is actually happening.
Got
the
it.
fact that people are wanting your solution, not churning out, recommending you without you asking, adjacent use cases coming to you, that's an indicator that it's, things are working in your favor. So we look for both. If revenue can't be available as a metric, these are the metrics that give you the
these are the leading
sense.
indicators which
Which
point to a revenue
eventually
eventually.
lead to revenue, monthly revenue, contract value increase, all
Got
that.
it.
That comes later.
Got it,
These
got
are very good other indicators for you to know if there is actually a PMF coming.
Right, exactly. Okay.
And
Actually,
I totally agree pretty much in the sense revenue is just a proxy.
okay.
Okay. It's a decent proxy. I mean,
Yeah.
the worldwide.
No,
people-
I'll complicate things a little bit for you
Oh.
because see in SaaS,
what did I do to you? Ajay?
no, because in SaaS business, VCs look at revenue and around 2 to 3 million. Used to be 1 million earlier. Now it's 2 to 3 million. So if your recurring revenue, annual recurring revenue is on a run rate basis, not as a accrued basis, is in that ballpark, then people say, okay, you have got product market fit. So that's a proxy very commonly used.
Yeah.
And I'm curious, is there any such indicative numbers you have for your fund or that you have seen in the industry?
Okay. So I think, personally, in my opinion, SaaS is just a delivery model.
Yeah.
Okay. And a lot of people confuse SaaS with enterprise, and it's not that. SaaS is just one way that you're delivering your product. Okay. There are many ways. Like I was talking to you yesterday, if he can deliver an Excel sheets, the customer is paying it, scaling, I don't care. Okay. He's making revenue, he's making great revenue. So SaaS is just a...
Fair enough, yeah.
And this ARR is again another term which people have so many definitions of it. Okay. The original definition was actually how much money is coming into your account, literally. That's a very important metric, not, potentially build a
No, that's what, let's
yeah.
let's assume that's the number, yeah.
Yeah.
It's the real revenue. But today's,
I'll
this
tell you.
month's money into 12,
Yeah.
not last 12 months money. That's the only caveat.
I understand what you're saying.
Yeah.
Usually it used to be something like 3 to 5 million. It depends on the business. It could be as low as $1 million. And I'll tell you why. The reason is, end of the day, what are you looking for, right? You're looking for whether that company can scale.
Right.
Okay, that's the fundamental thing that you're looking for. Obviously, in the Excel sheet, it'll scale. All these guys will show you a hockey stick, which is...
Right.
And sometimes, honestly, sometimes it's idiotic. Okay. Okay. I mean, I'm sorry to use the word. It is, some businesses cannot and should not scale that way. Okay. What happens is, let's say today you've got 10 clients. Next day you will show you have 40. Okay. And what will happen is typically is that in order to deliver the next 30 clients, you need implementation guys who are as good as your founder.
Yeah.
Okay. That you're never going to have. It'll take you 4 years to build that kind of capability. So how are you showing me in the next year you're going to add 40 clients? So scale is not math. Scale is not, exponent. Organization scale is a very different ball game.
Right.
And that people, unless, I like to look at that. Have you thought through those things?
Got it.
So for example, let's say Gokul. If Gokul has to implement 10 things, unless you can clone Gokul, it's going to take 5 years. Okay.
Yeah.
If Gokul comes to me and says, tomorrow morning I'm going to do 10, I'm not going to believe him.
Got it. Actually, so 2 people are pending, but we are 12 minutes to it. So I think
We can
maybe
take
we'll
on.
let's open it up to the
Absolutely.
questions. Yeah.
Yeah,
So that's sorry about this, but I think we want to finish roughly on time. So if there are any questions, please go ahead, start asking us. We are ready.
So, very good evening.
Yeah, it's on.
So, good evening, all the panelists. So, my question is to Mr. Lakshman sir. My name is Rahul Rajiri. I also work in the drone industry. So, my question was drone industry is such an industry where the regulations are in a very nascent stage, and so many companies who are working catering to the Indian government, Indian Army. So, since they are the anchor customers and many companies, they just have a lot of POCs, but not a product market fit yet. So how do you scope out a company, specifically one of your companies which is scoped out, how do you do that? And means what is it that you actually see in that company?
So I can tell you what we look for when we invested in new space compared to, so what we liked is the swarming technology. It's fairly unique that not too many companies in the world and in India have that kind of technology. For example, if you see something in the Republic Day parade, right, that is not swarming technology, okay? That's just some pattern which the drone flies to. Swarming technology is you fly into various territory for the lack of, let's say enemy territory, you fly in, you are in a Wi-Fi free zone, so to speak, and you have to accomplish that mission irrespective of what. If one drone goes down, something else needs to take off. So the kind of technology you need for that, distributed computing, real-time image processing, real-time decisioning, AR, VR, lots of things goes into it, okay? Composites, battery, what works in Leh Ladakh will not work in Chennai, right? So personally, we look for companies like that. If there's a company which is saying that I have a drone and I will do agriculture spraying kind of stuff, that's not of interest, okay? Because that's a use case which is going to rapidly commoditize, okay? Those kind of use cases. Use cases with respect to last mile logistic distribution is interesting, especially for mid-mile and large, I mean, maybe 100 kilometers kind of, 100 kilometers, 100 kilos is an interesting proposition. So be careful about the use case. If it's going to get commoditized, we don't look at it, and I would urge you not to get into that, because somebody else will buy it from China or somebody and cut your costs. And selling to the government on those kind of use cases is a different ballgame, okay? You will neither sell nor you will get money, okay? So don't do that. Look for high-tech use cases on drones. So that would be my advice.
Hello, sir. I'm Devant from Inside FPV. So, sir, would just like to ask you the same question, but in a different format. Currently, we are seeing the risk.
Same answer.
So, sir, in terms of risk-taking ability, there are many different factors. As you said, the tech would be hardened when we go into military terms. But while we take risk, let's suppose one of the ex-companies right now, listed companies, got a market crash from 3,000 crore to 2,000 crore, as you might be knowing. So the drone just reached Pakistan. Like no matter what, how much ever you try out, how much you fall out for it, but nothing would happen again. So how do you see these risks coming into future as well? Because at the same time, you are strengthening your tech, but going into global scale as well. But right now, the company is still struggling to go at a global scale as well. Because currently, India is a volatile market. यहाँ soldiers भी इतना tech effectively नहीं चला पाते जितना बाहर के west side चलाते हैं. So how do you see this growing up?
So I'm not sure I understood the question. Your question is the technology mature? Is that the question, or is it that the company mature? What is the question? Okay, to answer your question, I think both the technology is evolving. It's not like, and today, I mean, the future of warfare is going to be robots and drones. There is no two ways about it, okay? I was speaking to somebody who was in Ukraine, and very senior person. He said there are certain cities in Ukraine where people don't come out during the day. Okay, the city is ruled by drones and robots. Okay, so the future of the world is getting there. Okay, and the technology will have to. India doesn't have a choice but to invest in the technology and get there. There's absolutely no choice. Okay. Unfortunately or fortunately, because of the geopolitical situation, one of the things everybody in the world has realized that anything can be weaponized. What do I mean by anything can be weaponized? God forbid, for some reason, tomorrow India has an issue with the US. Your Gmail will not work. If you had money in your Apple account, it will not work. If you had money in Google Pay, it will not work. Okay. So world is getting to a very different place where anything can be weaponized.
Yeah.
So India doesn't really have a choice but to invest in areas like drones, robotics, etc. It's writing on the wall. Okay. And a lot of people at very senior levels understand this very well. Okay. So yes, drones will fly, drones will crash, all that will happen. Okay. But I think there's no choice but to continue to build on it, continue to harden it, continue to try it. So companies which are on the periphery, we just put things together without core technology, will fall out over a period of time. That's my...
Hello, sir. Hello, sir.
One second. Go ahead. You go ahead. Please, yeah.
So initially when, like as an engineer who's working on something, trying to build a product, we are really enthusiastic about, what this might look like in our head. Combine that with the fact that customer will have an imagination. How do you go about testing the waters when, I know that all of you are from a background of selling to enterprises and businesses, but I'm talking more about business to consumer. So how would you go about, testing the waters there? And how do you really put the ceiling that this is my product, not something that I will build over 2 years or 4 years, but I put a, realistic ceiling that, okay, this is something that I will sell to customers, and maybe then we'll keep on reiterating. So how do you go about testing the waters in that sense?
The basic product management principles don't change. You always have to make something that is required or people would want, right? They may not want it now, but they want it after they look at it. So that's sometimes the difference, right? And there is the imagination of the founder then, right? So you obviously can't be a person without imagination. You have to imagine a future which doesn't exist, right? That's the basis of a startup. You are imagining something and then bringing it to life. Whether it is for a consumer, so you have to observe consumers. There's no other way. If it is enterprise, it's difficult to observe enterprise because it's behind a wall and you cannot do it. But even observing consumers is an art. People always assume too much that I'll build something for myself. If there are enough people who share your taste, great, but it may not be so. So one has to be cautious of that, right? Or you're making something for your spouse or your family, and your family, is it a representative family? So you have to do the right observation and watching. So a lot of it is just pen, paper, watch. It's not expensive, by the way, right? That part is absolutely not expensive. One should not raise too much money at that stage. It's not a great idea, right? Just do the basics of product management.
So I would just add to that, the users or customers cannot tell you solutions, but they have a problem. And a job of an entrepreneur or a founder is to observe the problems are real, and to, what Steve Jobs says, read things which are not yet on the page. So they should be facing a problem, they should be trying to solve it. If you ask them for a solution, they can't tell you. But that's up to you. So you'll figure it out. So
it's not that they won't tell you. They will tell you.
They don't know,
But it may not be the right thing.
They'll always tell you a horse. They'll not tell you an IC engine.
Yeah, exactly.
Right? So
exactly.
That has to be very careful about.
Just to operationalize what you said, right? One way to quickly check if it's a consumer product, something you can quickly come up a mock product with, is use stuff like Kickstarter. Use iterative platforms like that, put it out there, see if people are willing to support a product like that. Raise a small couple of $100K using a Kickstarter kind of program. See, you get a good feel for what people are willing to pay, for a product like this. We've seen that works for consumer well.
Right. There's actually, okay.
Yeah. Hello everyone. So I think I have a question for Gokul and Saurabh. When we talk about robotics companies or startups, and typically the challenges faced by them compared to software products or software companies, what are those, if you can give some idea about it? And let's say even if you crack the actual product what you are supposed to deliver, then how do you carry out? And in that also same problems are getting again introduced in the issues or challenges what you are going to face afterwards also when you continue on that product. So what are those compared to the other industries? Definitely I can say like there are other hardware companies or other, but then we are having software also in our case, and I think there are other things like multi-domain scenarios and all. So like what are the things which you can highlight?
Got it.
I think everybody makes robots here, so I don't know if they probably know the problems. I'm guessing this is Roscon, right?
Correct. But
so see, software has the luxury of undo, which hardware doesn't, right? You don't have an undo button, it can go to a point where it can like deal with industrial robotic arms, the 60 kg iron moving at 2 meters per second speed. I can't move my hand at that speed, right? A mistake somewhere in the software can actually end up life-threatening to someone, right? These are some of, and any of those mistakes that you do, you have to be, the fail fast, break things doesn't actually hold good here.
Yeah, doesn't make sense.
And there's also one more point, right? So that could also relate to, again, I'll, for my sanity's sake, I keep using this template to say, am I playing at an application level where I'm borrowing an existing tech, right? Because don't simplify this domain. This robotics forever has been an extension of another tech, right? So today, the gamut of robotics has grown to include a lot of things, right? Initially, it used to be a human replacement. This humanoid imagination has been there for a very long time, and we still don't understand what all the layers of technology that is needed. It is supposed to be an independent industry, but it has always been an undercurrent, right? Where whenever computers came, they thought, can we put these computers on the machines and suddenly it will become as intelligent as a human being? So it just, now the AGI is happening, trying to do that AGI aspect is happening, and then you have NLP to its best, right? So, and then again, can we overlap this? There's this perception issue. The moment things move like a human, we assume personification issue that we always have, right? These are perception problems on one side when we build. Second, supply chain is always underlooked. We go about trying to build a product through integration. You can't, right? If you can, maybe I want to take that statement back, but it's not that you can't. There's a lot of serendipity involved if it could become a product in itself, right? And at least that's what is the problem that we are facing, right? The platforms needed to build whatever that are the packaged format of like having an arm that is like a semi-humanoid that you could put in a place where it could handle multiple varieties of objects and manipulations by itself without having a prior learning and programming. That's a problem when you're trying to solve. There are so many components, they don't go well with each other because each of those components were built for entirely different industry, for an entirely different problem. That's the first thing that you have to take a list. Don't assume what the spec sheet says, right? Don't assume what those components were meant for. Actually ask if it was meant for a different application that they thought and then built for, or a different genre of industry that they built for, could it scale to my problem? Right? There will always be a gap that it doesn't fit. This is one thing that is overlooked often, and it will also, if you don't understand the amount of service backups and things that come along with the component, you might be able to successfully build a prototype, you will never scale into a product. It just breaks your back at a time when it doesn't, right? Many of these aspects you don't face with the software side. Supply chain in itself is another, operations and supply chain and the thought of manufacturing it, right? That's a very different, if you look at a car, the amount of investment that goes into the R&D of a car versus designing a manufacturing plant, which one consumes the most? The plant, right? In fact, that's the product that they actually build. That's the differentiation between a Maruti or a Mahindra or any of, whoever, right? So manufacturers. So this is again another overlooked problem when it comes to hardware, right? The genius is not in making that work because that's where we get absorbed as engineers, right? Putting them together. There's so much more stages that you have to, that's what he actually says is fundamentals of, product design and product management in itself, right? So, yeah.
No, nothing to add. All sage words.
Sorry.
Sir, panel, I have a question. Like, in today's world, America has...
One person.
Hello everyone, I'm Rahul. My question is to Mr. V. Lakshmikant. Like, why I'm asking this question because you have been through, like Einstein have been in the patent account and he was seeing all the scenarios to build his theory. So what you see, like all the startups or the companies coming to you, given this data or the history you have, which of the technology remains like relevant from ages, like it never has changed. Just like, for example, if somebody wants to build a business around the soft skill, like managing people, it's always been relevant. So what is there in case of technology which you see? Like it can be very useful for everyone here. So I just ask.
It's a tough question. If you ask me, all that is needed on software technology was invented in the 60s. Okay, you can go and read pretty much all developments that are supposedly modern today were all invented in the 60s. Okay, so in my opinion, everything has changed and nothing has changed. Okay, that's the way I kind of look at it. Okay.
Yeah.
Just to tell you, I came to this hall last time in 1997, and I brought along with me a gentleman called Strostrup. How many of you have heard of Strostrup?
Yeah.
Okay.
Yeah.
He's the father of C++.
Yeah.
So we brought him to India, limited tour
Nice.
between Delhi, Hyderabad, and so this forum. So in my belief, fundamentals of programming will not change. Okay, attitude changes. Okay, and this is where I think Gokul's point about undo is important. If you approach software as you can't undo, okay, you'll find that the quality of the product you produce will be immense. Okay, that's all I would say. In the sense that principles are the same, nothing has changed. Okay, fundamentals have always remained the same. So if you ask me, go and do C programming. That's the way I would say it. Okay, because you learn a lot at the machine level interface. The more and more you use abstractions, the more and more you get hidden from what happens underneath, and your expertise is limited. Okay, so
I chime in with that. Yeah. Start with C++, please.
Initial portion of your career, please try and get to do everything as much as possible, as close to the machine as possible, so that you understand it. Okay, that would be my. And read about computer history. Okay, because that actually teaches you a lot. There's nothing really new which has come out. Okay, obviously things are faster, better, all that good stuff, but fundamental principles have not changed. So we can go on. It's a long answer. You can write to me at vlk@pavestone.vc. I'm happy to have that conversation offline with you on this one. So.
All right, fun.
So, good evening, panel. So I have a question, like Americans are good at creating brands, while Indians are not having like that much brand. While even Tesla is able to like be in Fortune 40 in 20 years, why any tech company in India is not able to form a brand in world market? And what hinders Indians from creating a world brand? And if I start today, how can I create a world brand?
I think it starts from having I think it starts from being in a rich market, first of all. Right?
Exactly.
So it's the other way around. We think people are not making the product, but the products are a function of the market that you operate in.
Yeah.
So as an Indian, you can make Tesla, you just move to the US. Okay?
Yeah.
And that's a good way to do it. Be in a bigger market, you will make bigger brands, by definition. I mean, now Perplexity is made by young Indian founders, etc. But they are making it in the US. Could they have made it in India? It's no shade on the founders here. It's the reality of the market that we operate in, right? I mean, you are working in a $25 trillion market versus a $3 trillion market. There's going to be a difference, right? So you have to be in the right market. So it's not a fair comparison. They're very good Indian brands. They are not as big because you have to adjust, normalize by the size of the market that they're operating in.
Yeah.
And I'll add to that, actually.
Can I add to that?
Yeah, go ahead.
See, I think this brand, brand is not a product here. Brand is psychological. Okay, so that's a fundamental difference.
Perception.
Okay, and that's what I was trying to point out earlier. I'll just give you a very plain analogy. 50 years back, if you said if you are from India, or 70 years back, people would associate India with Mahatma Gandhi. Okay, India ante Gandhi, you are in no clothes, you will starve. That kind of image was there, right? Maybe 50 years ago, Mahatma Gandhi plus yoga. Okay, anybody who knows yoga, who can stand on his head, is an Indian kind of stuff. Okay, maybe 20 years back, Mahatma Gandhi, yoga, and IT industry. IT industry, everybody talked of services. Okay, if you have your laptop broken down, I call Bangalore. That you can see, right? And now potentially India is a brand from an IT product perspective is building. Okay, it will take 10 years, 15 years from now. Okay, so brand is in your mind. Let me ask: given a choice between buying Tata and BMW, what will you buy? Why? Right?
Yeah.
That's the reason. Okay. So brand works that way. I can tell you in this room, if I ask this question, you will want everybody to buy your robot, but you will go and buy the BMW car. Okay? So it's a psychological thing. It will come. And the more and more we believe in ourselves, okay, the more and more it will come.
One aspect that I wanted to see, brand is are you operating in a luxury market or are you operating in an essentials market? In fact, that's what Saurabh is putting together, right? So you're a brand of sorts if you're based on the utility that you are actually deriving and how people are perceiving. Brand simply relates to perception of value, right? Irrespective of whether you have the value or not, if they cannot perceive, you cannot perceive the thirst, then the water doesn't have value. You might die out of thirst, right? So India is a market, so there are brands even in India that's very famous for India, which is not there for so-and-so outside, right? So it entirely depends on, like Tata is a brand, right? Undeniably, right? In India, for that case. It's about, but what are they famous for? For catering to the essentials of the market, because this market is all about essentials. It's not about luxury, right? It's not about, okay, what's after so-and-so, right? So if you're looking for a cheaper car, then something else. If you're looking for an image that you want to carry forward to you, right, to altogether, like so, where you want to borrow someone else's fame and so with you. So you look at the market that is luxurious, right? So I think it has to be judged from that front, right? And if your aspirations are for, then the market that is bigger is the aspiration. So what it plays with is where the brand is.
Hello, sir. Yes. Myself, Sneh. I have two questions, one for founder side and one for investor side. So my question is, investor-wise, if I'm a student for a B2B robotics startup, what you will see as a seed investor, like qualities factors. And for founders, I have a question that how will you evaluate an idea and what's your take on idea versus implementation?
What is it?
He's a student. He wants to do a B2B robotics business.
Yeah.
So what would you look for?
In a seed investment.
For seed investment.
What you will look factors-wise?
I mean, see, from our perspective, depends on the market you're addressing. What is the tech differentiation there? Is there something clearly different versus what exists in the market? And not about what exists in the Indian market. How do you compare globally with the technology you are developing? Because as a fund, our thesis is build in India for the world. And we are not looking at India as an initial market. Our view is start with a global market view, use India as an iterative platform to get your product to be better, and then target the global market, wherever the market is. It is not, the focus is not on just the local market. So ensure that the tech is solid, defendable, with a proper technology moat. And then, of course, you need to have a large addressable market size. Of course, it's a seed round, so we don't expect you to have done too much beyond the MVP stage. But the team behind it should have something in them that will give the investor the confidence that they have what it takes to at least build this out for the next 5-10 years. We should see the capabilities at least coming together in the founding team, that they have what it takes to come together to build this out. In terms of what you can raise with that ecosystem, it depends. I mean, it may be a couple of $1 million in a seed check. But if you have all of this, inevitably that check size will come to you, 2 to 3 million. In the US, with the same story, you may even be able to raise 100 million for all you know, for a seed check. I mean, that is the difference in the size and scale of the market in that country. I mean, I in fact spoke to a robotics startup founder who's had a Series A round of 300 million, pre-revenue company, at a $1.5 billion valuation. Indian founder. Now, that same founder in India would not have found this.
Yeah. Sure. All right, my contradictory advice is don't seek VC money. There's lots of money which is grant money available at the early stage. So go after that, figure out, because that's non-dilutive. Right? So it's no strings attached, non-dilutive. Figure out a way to latch onto that, build your initial product, then start thinking about something else, So VC money comes with a, it has a timer.
Yeah.
Because they need to return money, therefore you need to give them an exit. So there are a lot of baggage that comes with it, so don't go too soon for VC money.
And again, this also you understand from from your problem point of view. Like we had I think in fact, we are a CIE outcome.
Yeah.
And then it was one guidance again from Bharat Innovation Fund at the time, and then we went ahead building things. See, if I have to start with the bare minimum hardware that I need to even start what I need to start was around $350,000 to $400,000. Without which I can't even show a prototype, right? You can't do anything about it, right? So it depends, right? So depends on the problem, but most probably if it's not so foundational, you don't have to set so many things. Incremental is always best, right? If you have, but on the other hand, I don't think I got the second question.
But okay, we'll one question. We are already running out of time. Maybe 2 or 3 more questions, then we'll wrap this up. Yeah.
I think we should wrap it up.
Excuse me, sir. I would like to ask something.
One second.
No, let the lady ask.
My question is for the founders. Like Gokul sir mentioned, the roadmap from product to problem to solution is not clear all the time. And when you are pitching to an enterprise, which can, that it will eventually generate a lot of revenue for you, but maybe the enterprise is based like sticking to their traditional ways, and then they have a sab changa hai mindset and they don't want to change. So how would you pitch your product, which will do well? And if you have stories where a success story in India or somewhere else.
You want the truth? I have no idea.
No, but I'll caveat that.
I can try to answer. This is part of the PMF problem.
Yes,
See,
exactly.
all problems are not worth solving.
Correct.
There may be genuine problems for which that's the M part of, right? The P may be right, but the M is not, you don't have the PMF. So you may have a good solution to a problem. It's better than the status quo, but the customer is okay. They don't need to change the status quo for some. So the right time for a product typically is when there are some other forces, there are some macro factors also, which are making customers change from where they are today. If those macro factors are not working, and Gokul has the right answer, and nobody knows, by the way, right? So usually as a founder, you will do what you want, you will do what you like, and then you have to get lucky also, right? So this is where sometimes luck, because you can't exactly time it, right? I mean, you start the product journey, and your product, when it has reached this stage, where you're battling this question, you're 2 to 3 years in a hardware company, right? It's not 6 months in. And how do you say 2 to 3 years in, is this going to happen? Is the market going to really play like this? And that's where you have to be agile. So sometimes the agility comes in that you find an adjacent problem where this macro factor is working. That's why you are pivoting, right? That's the whole reason to pivot. So that macro has to be there.
What would be the macro factors that investors
No, they know macro better than us. Okay.
Yeah.
They are looking at macro all the time. Okay?
No,
so today, I can tell you in our industry, for example, one macro is that, especially like Western countries, I mean, they don't have working population anymore, right? So there are no people. So automation has a huge macro factor where there's just no more people in factories to do the stuff that they want. But in warehousing, that was not the main macro factor in warehousing was the throughput that is expected cannot be done by humans.
Correct.
That's the macro factor, right? So they're different, and in manufacturing there is one macro factor which is, today you have to make lot sizes which are so small. Earlier you could say I could make 100,000 units of some 5 products. Now suddenly you have 20 variants that you have to do. Now that's a macro factor which has come in. Now you need to change your automation. You need to change it. You can't avoid it. Otherwise you'll die as a company. Then is when your product is very relevant to the customer.
So in fact, the way my story, right? So the way we discovered, and then we went about, of course, being an insider within that industry, dealing with the customers for quite some time, gives you a good amount of sanity and an understanding around them. So the problem that you're looking at is, I kept saying common denominator in all of these places, right? So customer needs automation, but what you're looking at is, how does he want the automation, right? What could work for them in a very simplistic manner, and why does he want it? Right? You ask, why does he need? Where is the need coming for him? What he wants is an automation. Does the automation have to happen with a person, or does it have to happen through? Because the one other thing, right? If you are trying to automate with a machine, before that it should have been automated with a person. What do we mean? Any person can come, they can be replaced. They should be able to recreate the same process or production without any impact, right? So one factor that we looked at is it a cost center or a revenue center that we are looking at, right? We are looking at a cost center. If you're looking at a cost center, how will we make them value this? Because they are trying to cut their costs using automation and so on and so forth. So am I playing in that field, or is there a revenue perspective that they look from this particular product? So if I cannot say a revenue, I cannot say that it's going, my absorbing my product is going to transform your revenue, right? Where we said that, what if you could produce multiple varieties of products in the same line, right? What if you could, be insulated, insulate your investment against the technology changes, customer demands, and customers are constantly evolving. There is loyalty of the customers is very, very short-lived today, right? And they swing from one brand to another brand very, very fast, right? Today, and when that happens, are they nimble enough to adapt and then move, right? So suddenly it just transformed into a cost problem to a customer, to a revenue problem to the customer, right? So then that's the swing with which we took the underlying cut, saying that, okay, so what is that? Can I standardize the automation protocol, right? Can I standardize the hardware entirely, just like how your laptop is, right? Could we simplify the whole underlying automation for them, right? Instead of he having to custom build a machine from one case to another case to if I want to pick a bottle, it's a different machine. If I want to, put the bottle down, it's an entirely different machine, right? And each one takes 24 months to build. Could we simplify that problem first, right? Is this universal enough? Then we went back and then said that, how can I make it universal enough so that I could productize them? What's the common denominator that I can actually, that will not change between one customer to the other customer? Human being, right? What's the common denominator? So what are the features of the human being can I absorb so that without having to build a human being, which you can't today, impossible, right? That we can take it to different such problems in a, like what are the maximum faculty that we're using, which is common across all of these problems. And the rest you could commercialize. So what we did is, so I can't entirely replace a human being and then build a human being from scratch. So for this task, if he is actually using 70% of this that I could actually do, or 30% if I could standardize from a bottle to a pen when I'm manufacturing, that the machine could be just common between them, then remaining 70% can I use it through customization and so on and so forth. So that's the call in the gradient of, how much of solution and how much of product that you would do, and then you could.
Can I just
one last question, actually, sorry, because
summarize this for you.
Yeah.
Essentially, you're looking at the problem from your side. You have not looked at the problem from the customer side.
Yeah.
That's the fundamental issue. You think you have something so great that he has to buy it. Just because you have something so great, he need not buy it. Okay, he has his own reasons why he buy it. Okay. So first understand why he is wanting to buy. That's essentially what we're all saying.
Right.
Then you can sell.
Yeah.
Okay.
Perfect.
Yeah. All right. One last question, because one has to catch a flight, one has to do a meeting. But yeah, go ahead, last question.
I wanted to ask, when we are talking about a robotics field, one has to look at both the hardware side as well as the software side of it. Now, when a person is going for a product to build a product, he will be has to decide which problem he is going to solve. Like as you said, in software we have undo. Like building a software and correcting mistakes are easier in compared to hardware sites where the things become difficult. Now the problem is, if we go for a particular product, how do we understand like this is the problem I want to solve? And if it's harder, what is the rate of return? Like from what I have seen, industries have started from one stage and they have diverged to all other. ITC started with selling like products, cigarettes, and now they are making softwares as well. So Facebook with software, now they are making metaverse glasses. So companies are diverging from not from where they started to all the other fields. So how to point out where to start first, like directly go with the software-based company or have a robotics-based company which is having both software and hardware component. And like if we are solving some problem, is it like how much will it come back to me? Like harder problems not necessarily give you more money or more reward. That's what my confusion was about.
Right. So first thing is, I think if you are trying to start out, don't observe companies when they are already too big.
Yeah.
Right? I mean, if you are looking at Apple, you have to look at Apple from 1980 to
80s,
1983. That's it, first 3 years. Okay? After that, they were already too big. Right? Facebook, if you are looking at it, look at them when they were 2008 or whatever, right? Yeah. Time frame. So you can't observe ITC and say, I will draw a lesson from it and do startup. Please don't do it. Second part is, do what you like, first of all. If you don't like it, it's not going to sustain. Right? That's very important. The third part is what he just said. You have to understand why the person wants to buy from you. If a lot of people want to buy something from you, you will become very rich.
It's a wrong motivation to begin with, saying that which would make money and then I'll be a startup in that place. Yeah. At the best, you could end up becoming a service company, selling your skills. Yeah. Worst case, right? If at all luck favors you. Right. But if we begin from that perspective, I don't think that's the. It's
not a very sustainable way. It doesn't work for a long, and this takes long time. I've been at it 7 years, 5 years, right? 10 years. Idea Forge, 20 exactly. 18 years, right? So it's not. Nothing comes easy. You're doing hardware, first let hard.
No, I will add to that.
It's hard. So please.
I'll add to that. So it takes on average 4 years for a startup to raise VC money, first institution money. It takes 10 years after that to succeed for a hardware company. So it's a 14-year journey. Yeah. So it's a long journey. Do what you really, really enjoy. Otherwise, it's tough.
And success rate is so low. So at least at the end of it, you should have enjoyed it, right?
Yeah.
Very important.
So basically, he's not going to take up.
All right, thank you very much. I think we sorry, but we need to wrap up because there's some constraints. But thanks a lot for all your questions, for listening to us.
Appreciate it.
Thank you.